Here's another company that I'm going to say has actually struggled quite a bit, and that's going to be Target. And Target, they fell again after their earnings report. They actually missed first quarter revenue estimates and cut the full year sales outlook. Executives from Target, they blame tariff uncertainty, which is not surprising considering the current situation, weaker discretionary spending, and then kind of surprised by this, but backlash to the company's rollback of key diversity, equity, and inclusion efforts for its performance. So I don't know if the company's making excuses potentially for lower sales. I know other companies have kind of rolled back. DEI is also what that's known as, and they haven't seen the same decline in sales.
So they have backlash to rolling that back,
Yep.
or backlash to having it in the first place? Because I think they had backlash for having it in the
Exactly.
first place, and now they have.
This is why I think companies got to be so careful with politics, because you piss off half the people. So then you pissed off half the people rolling it out. Now you're pissing off the other half of the people rolling it back.
Not worth
it's like,
it.
oh
now
man.
now everyone's mad. 100% of people are mad now.
And I was going to say the other interesting thing with Target before I get into the numbers is I was kind of curious on this, because obviously the tariffs are so impactful for the businesses currently. China is the one that worries me the most long-term in terms of our back and forth and what long-term tariffs might look at with China. And about 30% of Target's merchandise is actually sourced from China. So that could be a problem for their earnings, I'm going to say, over the next 6, 12, maybe even 18 months as we continue to, I'm going to say, fight with China in this trade war. This is a significant decrease, though. I was shocked by this number. This was scary if they were in this situation now. Back in 2017, about 60% of their merchandise came from China.
Where does it come from now?
They probably diversified to Vietnam, Cambodia, kind of those other Taiwan, different Asian countries over there.
Asia, yeah.
But either way, at least you're kind of diversifying that supply chain away from China. But again, 30%, that's still going to be quite impactful from Target.
Yeah.
Curious to see if they're going to try and amplify that shift away from China given the current tariffs. So that'll be something of interest to watch for Target as we progress. But looking at the current levels for Target, the price to earnings, the stock has been hit quite hard. So price to earnings is 10.3 below the industry average of 38.7. Price to sales at 0.4 below the industry at 1.2. Price to tangible book 2.9. Industry average 39.8. Price to cash flow 6.6. Industry average 21.3. You're looking for a 5-year estimated growth of 13.8, which gives you a nice PEG ratio of 0.9. Valuation's very strong here. Plus, you get a good dividend yield of about 4.8%. That's a real dividend, not 0.6%. Yeah. Company uses about 49% of their earnings to pay that out and about 58% of free cash flow to do so. So I'm not necessarily worried about that dividend. It's still pretty secure. Mm-hmm. Balance sheet for Target, current ratio 0.9, a little bit light. Like I say, maybe a little bit higher. And debt to equity at 1.4, also a little bit high. So I'm going to say the balance sheet is okay. I wouldn't say it's overly strong. I wouldn't say it's weak. It wouldn't be a deterrent for me investing in this business. Net margin, obviously higher turnover business. It's about 3.8%, so they still make about 4 cents on every dollar of goods that they sell. And this is, again, where Target is interesting. The current price here, $94.01. 52-week high, $167.40. And the low, $87.35. Year-to-date, the stock's down 29%. Over the last 1 year, down 34.1%. Over the last 5 years, you're down 10%. A 10-year return now is about 56%. So, over the last 10 years, I'm going to say you haven't done well with it. You haven't done bad, but, a 56% return is not great over a 10-year period.
Over 10 years, no.
Especially considering a lot of that lackluster performance has occurred over the last few years.
Yeah, so I'm sure if you looked at, years 1 through 8, it was probably
pretty good.
Pretty good, yeah.
Yeah, and then if we go forward now to look at Target, January 2027, estimated earnings per share, $7.99. Actually gives us a target sell price of $132.63. So it trades under 12 times earnings, which it would place in the buy category. One thing that's always concerned me with Target, though, I get a little bit scared buying businesses that essentially don't own the brand because they could be displaced. And it's hard. They're competing against Costco. People love Costco. Competing against Walmart, which Walmart's been a very strong competitor over time. Can Target put themselves in that category of a Walmart, of a Costco? A little bit different than a Costco because of the membership. But again, you're still competing for that retail business at the end of the day. And I'm not sure. It scares me a little bit from that perspective.
The thing that scares me is the uncertainty around the tariffs and how much they have coming from China. That seems like that could result in a lot of volatility. And I'm sure that's contributed to what's happened with the stock price, and that's why it looks a little bit more attractive at these levels. So it'll be interesting to see how this evolves over the rest of this year.
And I do think this is interesting as well, but just kind of like in the market cap, because, I'd say most people would say Target and Walmart are quite comparable. Target's market cap is now around $43 billion. Walmart's is $776 billion. I mean, it's a
like
huge discrepancy.
5% of Walmart. Is that the math?
Yeah. Well, I just know that Walmart also is very expensive. So, I mean, it's not obviously, Walmart, I think, trades something crazy now on like 40 times, 50 times earnings. So you're getting 5 times essentially the multiple on it. The earnings and sales might be more comparable than the market cap, but the valuation is a huge difference. And what surprised me too, I saw this the other day, is TJX. They own Home Goods and what's the other big one?
Marshalls.
Marshalls. Yeah, I think they own Marshalls.
Yeah, the credit card.
Oh, TJ Maxx is the other
Maxx.
one.
I think Marshalls is in that too.
But their market cap about $141 billion. So
really?
$100 billion more essentially than Target, which I would say Target would probably be bigger, but they're not. So. I have mixed feelings. I want to say Target's a good maybe. I think there's some potential there. You get a good dividend, good valuation, but there's some definite question marks around, I'm going to say, the longevity of the business, and also, too, as you said, the tariffs.